Hey guys, nothing we say here is intended as personalized trading advice. It is all opinion only. And now, you guys can get a lot more from the Peter Leeds team by following us on Twitter, Instagram, Facebook, LinkedIn, or connecting with us here on the YouTube channel. I never do this, but I did it this time. I'll probably never do it again. But I went back to a video I did before about the 1929 stock market crash. And I watched it again and I freaked out about certain parts and I trimmed out as much as I could and I got it down from 20 minutes to 2 minutes and 4 seconds of stuff that I think you should see right now. It's so relevant, so identical to what it was like right before the big 1929 stock market crash. And I'm not saying that there's going to be a stock market crash, I'm not calling it, but I'm pointing out the similarities and you can draw your own conclusions. What I thought I would do is I'll play the parts that I pulled out of the previous video and show you, and you'll see how relevant they are. And some of them I'll just go through one after the other. And other ones I want to jump in and maybe say a few words about a specific clip. Either way, at the end of this video, you're going to have a different perspective on how everything is playing out, unless your perspective was already correct. At this point, the market strength was based and dependent upon expansion, leverage, borrowing money to invest. About 8 years of just continually rising stock markets. You could not go wrong by buying the dip at any point over the 20s up until the last moment. But the one I want to call out is this next clip. Notice what else was going on at the exact same time, right before the 1929 stock market crash, with a death toll of about 200,000 up to that point. Investors were distracted by other big things going on in the world at that time, and they forgot how quickly they can lose money so quickly with leverage. And just like 1929, we're seeing car sales declining. We're seeing declines in other things, not just steel and construction, not that as much. That was 1929. Now we're seeing declines in home building. All of a sudden, that's picking up too. Car sales are down and potentially going a lot lower. And throw inflation into there. We've got a lot of inflation that's putting a lot of extra tax on people. Things are costing more for everyone, no matter what you buy. But there were signs of trouble starting to show up in the overall economy. There was a lot less manufacturing of steel. That's a first indicator. While the overall construction industry was starting to become a lot more sluggish than it enjoyed during the roaring 20s. Now pay special attention to the first couple sentences I say here, and also what happened or how did the stock market react to that situation. The stock market was still showing or demonstrating all of the strength of the growth leading up to that point, but it was not yet being more of an indicator for how the economy itself was completely weakening. But instead of weakening, the stock market actually roared to new heights, new records in the stock market. Kind of similar to what we're seeing today, yeah? And for the next two parts, guess if I'm talking about the 1929 stock market crash or if I'm talking about today. Profits didn't matter anymore. The prices of the shares were detached from the actual underlying companies. Meanwhile, everybody was buying real estate. And so that just made the prices skyrocket even more. And so the more people jump on board, fear of missing out, and everyone's buying houses, driving up the prices to absolutely unsustainable levels. Now pay attention to the last part. It's about the return to reality. That's what happened in 1929. That's what will happen relatively soon now, about 100 years later. The real crash, Tuesday 29th of 1929. But it was a really quick and almost unnoticeable transition when it went from boom to bust. People invested on margin and leverage, and so it not only eliminated whatever money they had, it put them even deeper in debt. Thousands of banks just failed. A lot of times there's a period of a return to reality, and that can be very painful for anybody who's not seeing it coming or who's not positioned or setting up in case it happens. Hey, stay connected with us by subscribing to the channel, clicking the bell, and join us on some of our other social media networks like LinkedIn, Twitter, Instagram, and Facebook. However you do it, make sure to stay connected with us. We have lots of great information coming out for you guys.